thought stock of the day today, we take a look at some of the mergers and acquisition movement around Sydney Airport today, granting due diligence to the Sydney Alliance Consortium led by IFM after the group sweetened its takeover bid by 3.6% to $8.75 a share, valuing the airport at $23.5 billion. The bid follows two previously rejected proposals, which the board labelled inadequate. The non-exclusive due diligence is expected to take 4 weeks. Sydney Airport says the board's current intention is to unanimously recommend that shareholders vote in favour of the proposal in the absence of a superior bid. And Sydney Airport share price this morning tracking around that 8.38 mark on the back of the news. Look, Gaurav, does this look as though it's a done deal at the moment? And if so, do Sydney Airport shareholders just hang on and wait and cash in the shares? And the other thing, what does it say about other infrastructure stocks? Do they all of a sudden become in vogue?
Yeah, we've been saying this for quite some time, Koshi. I think infrastructure, by its very nature and the timing of the cash flows, the fact that it requires so much upfront capex, it is a prime example of assets that have been perpetually mispriced by public markets and are ideally suited for patient capital, private investors, and those who want certainty over high, sexy returns. And all that description perfectly fits Sydney Airport, as it fits many other businesses on the ASX. Spark Infrastructure is an example we've used in the past of a company that probably is better off in private hands rather than public hands, because it has to pay everything out as a dividend and perpetually raise capital to make new investments. It makes more sense as a private investment. It's been taken private as well. It's a great shame, I think, to lose Sydney Airport. We've had a buy on and off Sydney Airports for probably more than a decade, and it's been one of the great Australian businesses, a wonderful asset. But I do think this bid is probably enough to get it over the line. It sounds as though the board has every intention of recommending it, and barring any bombs, I think this bid ought to go through. And I think that's probably the right decision as well. This valuation is close to the highest that Sydney Airport has ever been valued at. And there's still a significant amount of uncertainty about the external environment. And I've made the case in the past that I think future profitability might be impacted by the capital structure. I just don't think it's possible for Sydney Airport to run with so much debt in the future. And that's going to be a hit on equity investors. So if I was a shareholder, I'd just be selling and moving on. I think this is pretty much a done deal. But there is an opportunity, there is a chance that someone else could sneak in. So the sensible decision is probably to wait it out. But I think this is probably going to be a done deal, and I think that's probably the right thing to do.
And from what you're saying, it's going to be better inside a big super fund than listed on the markets going forward.
Certainly better for the members of the big super fund.
Yeah. Mathan, what do you think?
Yeah.
Will they sweeten the deal to the superannuation fund members, give them a discount on parking? That would be attractive at Sydney Airport, wouldn't it?
Well, you'll never get that. They'll probably put it up one price. But anyway, and then you know what they'll do? They'll put up the parking fee by like 30%, and the members get it for less.
Yeah.
That'll give you a boost for everyone. Look, I love the fact that Gaurav used the word, as long as there's no bombs. Let's hope not, because that's the only thing the airline industry needs right now. This is a monopoly asset. There is a quality asset. Everyone knew that. They were having an opportunistic bid. The fact that we've got into an economic mess and a federal election cycle is forcing governments to open up. So the good thing about that is there was a window where the bidders were trying to get a bargain basement deal, and that kind of got squeezed. So right now, I think the interesting part is, I think the Sydney Airports is a done deal. I think Gaurav's right. I doubt there's going to be anyone else coming over the top. Valuations are pretty full here. But if you're a shareholder, you got very little risk in holding, so why wouldn't you hold? Even if the market crashes, you've got a takeover bid that's holding your share price. So it's probably a safe bid. I don't see any fundies selling out in the short term, so it should be okay. But what this is actually telling you is that the super funds are willing to pay top price for an asset that will deliver into the future. And because you're paying a top price, your returns are not going to be great. But what they're saying is the risk in the rest of the market is a lot higher. The uncertainty going forward is going to be a lot higher. So that's where the infrastructure assets are getting the interest. I think there's going to be more that's going to come into play. I know people are looking for the next target. You know, APA gets mentioned a lot. I like that around here. It pays a good yield. So if you think about the long-term cash flow model, I think APA stacks up quite well. I know Spark Infrastructure has been there. I think a lot of these infrastructure stocks are going to go into that play, because when you get into this low growth environment, these kind of guys, you know, boring is sexy again. So these guys are back on.
Yep, absolutely.